Good morning from Chicago traders. It's 8 a.m. Chicago time on Thursday, the 7th of July, 2022. This is episode number 2267. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick mic check. I'm operating from home today. I want to make sure the sound is good. Thank you for doing that. I guess you guys are trained now to give me a sound check. I appreciate it. Windows tends to change settings depending on what software you're using, Slack or Skype or whatever. It changes the settings, and I'm always surprised when I come on. Very cool. Okay, so let's jump right into. You've probably noticed by now that it's all about routine and process, routine and process, routine and process. We're doing the same thing every day, which for a broadcast that makes it quite boring, right? So it's like, oh, this guy needs to change it up. No, I don't. I don't change it up. Don't want to change it up. The goal is to be efficient and to repeat the same process because it's not the P&L that I'm after. I'm after the process, and then the P&L is a byproduct of that. Okay? So here we go. This is the Convergent Trading Pre-Market Summary Sheet. The overnight risk exposure is mild risk on, carried mostly by the European indices, Euro Stoxx 50. Again, if you recall yesterday, the European indices were quite strong. The Euro Stoxx 50 up 185 basis points, and the DAX is up 187 basis points. Today, we see that commodities are actually higher. Crude oil pushing 2.25% this morning. Crude has had a range of $96.57 on the low, $96.57 on the low, and a high of $100.86. It is trading right up against the high. It opened at $98.22. So crude opened, explored down into 96.57, has consolidated in the middle of the range around the $99 mark, and now is pushing through 100. So crude is somewhat bullish for just this session. Of course, it has come off over the last few sessions. It is one-time framing down on the daily. Copper, same kind of news, popping higher, 4% after being down quite a bit over the last couple of days. So, what's the deal here? The biggest news right now, political news, is the UK's Prime Minister Johnson resigns after several just botched attempts to explain away his breaking of the law during COVID. He's lost the confidence of Parliament and his ministers. Ministers have been dropping off like flies, and it's kind of the writing on the wall came over the weekend that he would eventually have to resign, and so he is about to announce his resignation. This is not really an impact on the markets. It might have a bit of a blip on the cable, but it's not really having an impact on the markets in general. China says it's considering a $220 billion stimulus package, but China has already announced several stimulus packages, and it just seems like they're taking the same headline and regurgitating it. Basic resources are strong, as you saw there in copper. Not really sure why, but they are. And then the last thing is the non-farm payroll report is tomorrow. So we want to think about how we're trading into the close today, since this is one of the major numbers that comes out every month and that drives overall policy. This morning, just an overview of what was released. Industrial production out of Germany came in at 0.2%, quite positive versus the expected negative 1.5%. Big news there for Germany. And then the balance of trade out of the U.S. came in at negative, at a deficit of 85.5 billion versus expected deficit of 86 billion. Exports came in stronger than expected, 255.9 billion versus 252.8 billion, and imports came in a little bit higher at 341 billion versus 339 billion. Initial claims 235, slightly higher than the 230,000 expected. Just a quick kind of sidebar. I want to make sure that even though this is not a macro type of trading channel that I have here, I'm not a macro trader, but you should be aware of what's going on with the dollar here. The dollar's just been tearing it up pretty good. Dollar strong. Strength means that we can buy more with the same dollar from foreign entities. So all of those Chinese goods are now cheaper, right? So it has a deflationary tinge to it. However, a higher dollar means U.S. Products and services, U.S. manufacturing and services are now more expensive, which is inflationary for those who import those services. The other view that I wanted you to look at, this is the euro US dollar pair. It is really pushing parity here. This is really interesting, and I believe this is why the DAX and the Euro stocks have been stronger, since they are very much manufacturing weighted. You know, companies like Siemens, Mercedes, BMW, VW, and so on. So you're seeing autos popping higher in Europe. You're seeing industrial products popping higher and basic materials popping higher. The euro is becoming a lot cheaper. The euro falling from just much higher levels back in the 2012, 2013 era. So this is again inflationary for Europe, of course, when products are imported, you need more euros to buy the same products, especially U.S. products. So just keep an eye on that. These are seismic kind of macro moves that we need to pay attention to. As far as the S&P is concerned, the S&P is in a P-shaped profile. We'll look at that in a minute. 206,000 contracts traded. Oh, and for today, we're getting, Canada has a major number here, the IVPMI. We're getting the crude oil inventories, and then we get Feds Waller and Bullard. And I bolded Bullard on the sheet because this Fed president tends to just really throw some grenades at the market. So you want to pay attention at about 1 o'clock Eastern for Bullard's comments. Back to the ES P-shaped profile. We've been just we tested down and we've been pushing up and holding sideways. The inventory is 70% long. The range is quite small compared to the recent sessions, but compared to the standard, the range is actually still pretty good. The point of control shifted 3860. We are just hanging on to that upper distribution from yesterday. Here's what things looked like yesterday. This is what was expected. For those of you who follow on Twitter, you probably saw that I posted about this yesterday. The key idea from yesterday is to pull back, push up into the 40, as you see here on the screen. Let me enlarge this. There we go. Push up to the 40. The 40 was expected to be problematic, and then break higher, and then eventually get to 38.75. The higher distribution that we're looking for is up here at 39.10. Of course, that's too far. It's a bridge too far for this the current range. So 38.75 was expected. 38.75 represents a low volume node and an anticipated resistance area on a first test. So that was the primary scenario. The secondary scenario is a fall through the low. Look for a pullback towards, if you recall, I mentioned the 15, 10 to 15 area, and then I'm looking for it to move to 37.75. We have a 100-point range down to 37.75, and that brings us back to the magnet. And if it falls through, then 37.12. 37.12 down here, and if it falls through that, then we're looking at 36.75. I didn't make those numbers up. It just happens to be that the 75 figure, the 75 handle, has been important in these century handles. So yesterday, 38.75 expected. Here's what actually happened. So yesterday we push. Here it is. Yesterday we open, we test higher, we push that, we test that 40, the 50 early on, pull back, retest, pull back, retest, and then we finally break, and we go right to 38.75 on the dot. I want to caution you here to think, from thinking that just because it went to 38.75 on the nose, that there's some sort of precision to the trading process here. There is no such thing. So don't be fooled into thinking that somehow I predicted 38.75 and we got it to the tick, therefore I'm precise and I'm a master at this. I'm not. There is no way to predict where it's going to turn. It just does. So just be careful that you don't fall into that trap of believing that someone might know where the market's likely to turn, or someone has a process that is so advanced and is so good that that they can predict where the market's going to turn. Here it is again. We opened right here into the 38.36. We pushed higher immediately. We pushed to 50. We put in an IB high at 52. And then it was just a chop fest. It was just a chop set fest with a whipsaws, lower high, whips to the other side, pushes the IB, pushes this low by just a little bit, comes all the way to the mid, and we have a mishmash of just terrible, confluence yesterday with the open, with the OS low, OS high in the area, with VWAP for RTH and mid and full session, and then VWAP for mid for RTH and full session, and it just became a mess. And then we finally break the IB to the downside and push to, remember, the 38.10 was expected to be an area here to test, and it just stops just above there. I think 38.12 or so, comes all the way back, retests the IB low. The action from here back did not make any sense to me in terms of anything more than just scalping order flow. And those of you who are in Convergent probably noticed that in the chat room I wasn't posting any structural positions. I was posting order flow type positions. The structural position that set up that I was looking for would have us run into the 38.75. Again, the 38.75 up here. But guess what? Other than this pullback to the IB high with a stop below the last low at 47 or so, there was very little in terms of structure to trade at this point. What I did find is structure down here, and I posted this image as well. Here, I'll show you what I posted in the chat room. 1 second. My point being, despite how pretty things might look in hindsight, it really isn't that clean a trade right now. This is a very typical summer trade. So I posted this image here in a chat room, and I was looking for structure down at the 48, 49 area to lean against and from the downside. However, that setup right here to short this occurred right at the close, so it was no good at that point. So the only thing we saw that was worth its salt in terms of structural setups is this right here. There was this, it was too quick for me, didn't catch it, but this would have been the primo setup right here. This beauty right here. We have, if you look closely, you'll have a cloud of big lot trades. There are blue dots everywhere, so there's a battle here. So the expectation is if it falls back through, it is very likely to hold this battle zone where there's a order flow battle right in here against this prior structure. The trade would be 48.5 with a pretty wide stop down at 43. Looking for continuation to the 75. That's where we that's the main trade. The secondary trade is a pullback to the IB with an entry in the 52 area and a stop below 48, giving us our 4-point stop and a much bigger target, multiple R target. Those are the key setups from yesterday. Let's move on to today. Let's look at the TPO chart. What have we accomplished here? So if you look at what we've done so far, we've sold off pretty hard, balance, gap down, balanced, and as I talked about a couple weeks ago, the bottom here looks pretty secure. Once we popped higher and left a gap behind, and the day that opened in the gap was unable to return to the 37.11.75, if you recall, is a double top right here. It was unable to get back in there. If it's unable to get back in there and it finished strong and it finished on top of the 37.75, then this low is relatively secure for the short term. The market then pops through to the other side, pushes the 39.50, and then on the day it pushes the 39.50, which was last Tuesday, it sells off and it leaves, you see these shadows here, these little shadow kind of projections, those are single prints. Leaves a lot of single prints behind, pretty poor structure. The first of those single prints is 38.75, right? Which also makes up our low volume node. So as we came up, the low volume node here is 38.75, and that was yesterday's high. If you look at the profile from yesterday, what is it saying? The profile from yesterday is saying it is balanced with a downward skew. This is fat to the downside again. Usually when things are fat to the downside like this in terms of profile, there's a tendency to extend. So think of it this way. A profile looks like this. It's kind of an abrupt end to the auction to the downside. Generally you end up with a weak low. Over time, what it wants to do, what it generally does, is it extends this low down till it has an excess low. So instead of being sharp, it starts to look like that, where there's an excess low, excess high, and we're hanging out in the middle. This at some point was an excess low, excess high, and we hang out in the middle, and that's what forms your 37.75. So today, being as it is, where it is now, 38.64, with a settlement of 38.48.25. That's that entry, the short entry from yesterday. Except the timing was poor given the close. Now that we're up here, it looks like it wants to attack this high again. One of the most important pieces to take away is that we are away from the lower balance. We're trading away from the lower balance. And so what this is saying is it's not done finding those sellers. So in order to find sellers, what does it have to do? Shouldn't have put that arrow up. What does it have to do? What does the market have to do if it did not find aggressive sellers? Come on now. Participate. So let's move back to here. Did you all fall asleep? It has to auction higher. It has to find those sellers. So this is where we get the overnight session. The overnight session has a P shape profile. So if you look at it, it looks like a P. What it has done is it has tested down, put in an overnight low, which is at 38.3250. Has put in an overnight low, and then has auctioned higher and has accepted prices higher. And guess what? Again, we have VWAP in the vicinity of the overnight point of control. The mid is a little bit lower, but overall the market's accepting these prices in what was yesterday's upper distribution. So we are in yesterday's upper distribution. So if we look at yesterday's profile, it looks something like this. A very sharp middle at 38.50, and then a lower distribution over there. Okay, I should put a cigarette on this guy like this, and he's smoking. Anyway, so we're in the upper distribution here, and we're holding on to these prices. So what does that say? What that says is the market is very likely to retest at 38.75. It's not secure, and if it takes the 38.75, it is very likely to walk itself up. It's very likely to walk itself up to 38.94. 38.94 above, and then 39.10 being the key figure that I mentioned yesterday, still the key balance above. This does not look to be done on the upside. What would nullify that idea? The nullification of that idea would have us fall below the 50, where the battle really occurred in this overnight session and yesterday. So you could see the 50 there. Actually, we took the 50 and rejected it the night before. There's a 50, there's a 50, there's a 50. We held from above here, and then we got below. We retested the 50 and we're holding. So this over underline really should be moved to 38.50 at this point. So if we fall below the 50 and then we're weak retesting the 50, I'm looking for a short back to 38.10, the over underline, looking for a bounce back into that 38.30 area, 38.25, and then a continuation through the 3800. And now we're in business in terms of a fast payout on a structured trade, which is likely to give us 37.75. So the positive scenario, the up scenario, let's go through this again and I'll let you go. The positive scenario is this: open, test down into the 50 again, as I outlined. 50 mid-century figure has many tests, retest towards the 50. Look for that impulse, look for that breakout. So we need power. Look for the impulse, pull back into the 37.75, break, look to lean against the 75 to 72 for a long, and then you'd be looking for 38.94. 94. Okay, and then once, if it retests and holds and pushes through, the 39.10 becomes in play. So 39.10, that's the primary scenario. Why is that the primary scenario? Because we're holding the upper distribution, we're holding above balance. See these highs? We're holding above here. We've moved away from the point of control of 37.75, and so I'm expecting, my bias is to the upside unless it does the secondary scenario. So I'll change colors here. I should be using my normal colors. Tests higher, comes back down, breaks through the 50, retests the 50. It will likely be murky. Look for short, and then look for the low, the overnight low at 32 to give away. And then now we're looking for a break of 38.10. Retest at 10 through the 3800, and then the target becomes 37.75. That's 100 points of range. It's ambitious, not likely to take place, but if we do fail through, the one-time framing is now positive, and a lot of people are likely to puke them out at 38.10, which sets up a secondary opportunity into 37.75. That would be your secondary. Okay. Don't forget, tomorrow is the U.S. unemployment and non-farm payrolls report, and that comes out at 8:30 a.m. So pay attention on the close. There may be some hedging or some tweaking to be done by the larger players, and just come in with a plan tomorrow. It's probably not wise to trade. Today, just wait. We are opening right around the overnight point of control and VWAP. Wait for that first push. Don't worry about missing it. Wait for the first push, and then engage with the market in the direction of whatever scenarios you've set up. Good luck.